Ever stared at your credit score, wondering if just looking at it is somehow making it worse? You're not alone. It's a common misconception, and today we're diving deep to finally answer the question, does checking your Equifax credit score affect your score? Before we get into the specifics of Equifax, let's quickly recap what a credit score actually is. Think of it as a financial report card. It's a 3-digit number that represents your creditworthiness, essentially, how likely you are to repay borrowed money. Lenders use this score to assess risk when you apply for loans, credit cards, mortgages, and even sometimes things like renting an apartment or getting a cell phone contract. Now, there are 3 major credit bureaus in the U.S., Equifax, Experian, and TransUnion. Each bureau collects and maintains information about your credit history, and they use slightly different scoring models. This means you might have slightly different scores from each bureau. Today, we're focusing specifically on Equifax. So, where does this myth about checking your score hurting it come from? It stems from the difference between hard inquiries and soft inquiries. This is where the confusion usually lies. A hard inquiry happens when you apply for credit. Let's say you apply for a credit card or a car loan. The lender will pull your credit report from one or more of the credit bureaus. This is a hard inquiry, and it can slightly and temporarily lower your credit score. We're talking a few points, usually less than 5, and the impact fades over time, typically within a year, and completely disappears after 2 years. Why does a hard inquiry impact your score at all? Because multiple hard inquiries in a short period could suggest to lenders that you're desperately seeking credit, which could be a red flag. It might signal financial instability. Now, here's the key difference. Checking your own credit score is a soft inquiry. Soft inquiries also happen when companies check your credit for pre-approved offers or when employers do background checks with your permission. These types of checks have no impact whatsoever on your credit score. They're simply for informational purposes. So, to reiterate, checking your Equifax credit report yourself is a soft inquiry, and it does not affect your score. You can check it as often as you like without any negative consequences. In fact, it's a good habit to monitor your credit reports regularly for errors or signs of identity theft. Now, let's talk about some common scenarios to further clarify the difference. Let's say you're shopping around for the best interest rates on a mortgage. You get pre-approved by 5 different lenders. Each lender pulling your credit will result in a hard inquiry. Because it is for a mortgage, however, the credit bureaus understand you're shopping around for the best rate. Multiple inquiries within a short period, generally 14 to 45 days depending on the scoring model, are often treated as a single inquiry to avoid penalizing you. This is very important to keep in mind if you are rate shopping. On the other hand, if you're using a credit monitoring service like Credit Karma or annualcreditreport.com to check your reports from each bureau, including Equifax, those are soft inquiries and won't affect your score. There are also instances when your existing creditors check your report, for example, if they're considering raising your credit limit or sending you a promotional offer. These are also soft inquiries and don't harm your score. It's important to understand the difference between these types of inquiries because it directly addresses the fear of damaging your score by simply being informed about your credit health. Being aware of your score is actually a proactive and responsible financial habit. Now, let's address another common misconception. If a third-party website or app offers a free credit score or free credit report, does that count as a hard inquiry? The answer is generally no. Most of these services use soft inquiries to retrieve your credit information. However, it's always wise to read the fine print and understand their terms and conditions to be completely sure. If they require your consent to apply for a loan or credit card on your behalf in order to provide the score, that could result in a hard inquiry. So, in summary, checking your Equifax credit score yourself, using reputable credit monitoring services, or through pre-approved offers are all soft inquiries. Applying for new credit, such as loans or credit cards, leads to hard inquiries. Soft inquiries have no impact on your credit score, while hard inquiries have a small and temporary effect. One excellent resource for checking your credit reports for free is annualcreditreport.com. This is the only website authorized by federal law to provide free credit reports from each of the three major credit bureaus, Equifax, Experian, and TransUnion, once every 12 months. Taking advantage of this free resource is a great way to monitor your credit health without any negative consequences. It should be a key part of everyone's personal finance management. Regularly monitoring your credit report allows you to catch any errors or potential signs of identity theft early on. If you do find an error, you can dispute it with the relevant credit bureau to have it corrected, which could ultimately improve your credit score. Understanding the difference between hard and soft inquiries is crucial for managing your credit health effectively. Now that you know checking your Equifax score yourself doesn't hurt it, you can monitor it regularly and confidently manage your financial health. Remember, being informed is key to being in control. With that said, thanks for watching, and until next time.